So what we're going to do is we're going to head over to property 24 and we're going to search for the location that we are fascinated by. And we're just going to pick the first house we find on top, and this one goes for 975,000 Rand. As soon as we've gotten to it, we are now going to pick just two numbers. The first one is the purchase price, which is 975,000 Rand. And we are going to also look for the monthly repayment amount, which is 8,616. And then lastly, we are going to look for the rates and taxes, which is 800 Rand. Now, let's head over to the rental parts of the location to see how much are people paying on rental on a monthly basis. On average, people are paying anything from 10.5 thousand Rand. We are seeing 9,000 Rand, 7.5, 7,000, 8,000, 6,000, 6.9, which is like 7,000, 8.5, 8,000 Rand. So for the purpose of this video, let's take the highest amount people are paying on rent, which is 10.5. Let's go with 10.5 and do the calculations. So firstly, let's define what a gross rental yield is so that as we move along and explain the calculation and also its importance, you also get to understand why you need to look into a gross rental yield prior to putting down an offer to purchase a rental property. So a gross rental yield, it is the annual income of a property as a percentage of the purchase price. You probably don't understand that, but this is the monthly income of a property multiplied by 12 months, and then you divide that by the purchase price, and to get the percentage of the gross rental yield, you multiply that by 100. So let's do the calculations. Now multiply the 10.5 by 12 months and you'll get the annual rental income of 126,000 Rand. Now you divide that by the purchase price, which is 975,000 Rand, and you multiply that by 100, you will get the 12.5%, which is called a gross rental yield. Now, that is a gross rental yield. Unfortunately, it doesn't take into account the expenses and the cost of the property on a monthly basis. Now, we need to calculate the net rental yield. And to calculate that, we need to deduct all the costs, all the expenses from the income of the property. So let's do the net rental yield calculations. So we already know the purchase price of the property, the annual rental income. We also know the monthly rental income, 10,500 Rand. Now we need to look what are the expenses on the property. It's the bond repayment, the insurance, the rates and taxes, repairs of 5%, letting agent of 10%. Now when you add that together, you are getting a total expenses of 11,591 Rand. Now that's a lot of money compared to what you are getting on a monthly basis. Now the total net income is a minus 1,091 Rand. This is money you need to cough out from your pocket on a monthly basis. Now let's calculate the net rental yield. To calculate this, we are going to multiply the net income of minus 1,091 Rand. We'll multiply it by 12 and it's giving us minus 13,092. You divide that by the purchase price of the property and you multiply that by 100. Then it gives you a percentage. So from these calculations alone, you can already tell that this person is about to collect a liability instead of an asset. Now, if you want to be successful in real estate, you need to focus more on getting more assets than liabilities. Assets, they put money into your pocket. Liabilities, they take money from your pocket, like this property is about to do if this person goes ahead.